Hello, good morning or good evening to you. This is Sheila, and today I'm gonna go through basic bookkeeping with Xero and Quickbooks. This is a free tutorial, and this is a basic bookkeeping. So if you have a background in accounting or business management, finance, you know the basics because it's part of the curriculum um, s- discussed in college. But if not, this tutorial is gonna help you go through um, the basics, the what they call this, the common terms used, and how you're gonna do bookkeeping. For those virtual assistants who are new to my channel, please don't forget to click subscribe to the button on the descriptions, and I'm gonna put in workbooks for you as well as we go for you to practice on. So the subject matter expert is Michi. This is um, this is the what you call this persona that we're gonna create as the expert. Of course, my friends who you will hear on the few videos that as you go through the whole video, they are the experts as well in discussing bookkeeping, and I have been very fortunate enough to ask their help, and they have obliged in me to give out their expertise. Um, so um, you will learn Xero, the software, bookkeeping basics, so the terminologies, and then the accounting software, which is Xero, and QuickBooks. So what you will learn here is bookkeeping, how it can help you in your personal life as well as managing your finances, and as well as your business or your client's business. So most of the client's business are run with a lot of transactions, and they are busy, so they will need help in keeping track of where they at in terms of their expenses, what comes in, what comes out of the finances. So um, learning new skills can help you stand out and show your dedication for self improvement. So yes, um, for the newbies, if you want to venture into the bookkeeping virtual assistant, this is a great skill for you to base on. Also for the VAs that have been hired to work as a bookkeeper or handles the books, this is also a great base for you, or a foundation, so that you will learn how to do your job. If you notice, I have the magic learning. It's because I am also part of the um Magic Company, which is an agency that hires virtual assistants. So I am also part of that. That's why I have the authority to use material. So the course objective is you will gain confidence in bookkeeping, not just in terms of how it can help your clients, but for your own personal life as well. So please don't mind the background noise because I am on holiday. So I'm just putting this through for you, so that um, you will learn that working as a virtual assistant, as a freelancer, you can work anywhere, even in highway or in the beach or in the mountains, or if you are in a chopper, you can work basically as long as you have the internet connection, the laptop, and then the things that you need in order for you to function very well when you are doing your job. So this is my lifestyle. I am a virtual assistant, and I'm a freelancer that works almost everywhere. So I am on a holiday right now, and then I was thinking, how about I create a basic bookkeeping presentation video to help out the newbies out there or the virtual assistants out there who wants to know about bookkeeping, I am also an NC3 bookkeeper certified. So I know all of the terminologies as well. So if you have any questions, clarifications, and you need help or materials that you want that you can't seem to understand, shoot me a message in the comment section. Be very happy to help you clarify a lot of certain things if you need help with. And I have a lot of materials as well, so I can just send you a link where you can download that for free. So, okay. Don't be shy in asking questions. Okay. So today's agenda, you will learn bookkeeping accounts, bookkeeping systems, manual invoices, bookkeeping reports, accounting software, that is Xero and Quickbooks, which is definitely an in demand right now, especially in the Australian market and the American market. So you will learn how to balance um, the code of the day, that is balancing your money is the key to having enough. Okay, by Elizabeth Warren. And then on the dedicated learning, you will get basic bookkeeping and zero, so which is Xero and um, QuickBooks. So what is the course? So you will learn and understand the basic concepts of bookkeeping, such as recording transactions, making invoices, using the relevant software to assist in your client's business. All right. So what is bookkeeping? What is bookkeeping? It's the process of recording the financial transactions and information pertaining to a business on a day-to-day basis. All right. So some of the examples that you see is this is a cash receipt, and then this is a purchase order. So this is an invoice provided by your seller or a seller, and that usually what you'll find here is the amount what the buyer owes to the seller. So what usually what you have ordered either via phone or email. Um, for example, a product XYZ. So it's like five boxes of bond paper. So this is the quantity, and then um, 15 boxes of corrugated envelopes or something. So this is the amount and then the total. So usually in your purchase or in a purchase order, you will find the purchase order number and the date, and then the company name, vendor, etc. One sec. So so this is a purchase order. That's what you find in purchase order, and then the total. And then this is an invoice. This is a sample invoice. This usually documents the items and then the records of the transaction between the buyer and seller. All right. So, um, yeah. So your role as a bookkeeper is you're gonna record and categorize any transaction that has to do with the company or the business's money. So the business money. It's not your personal money, it's the business money. And then so so um basic basic terminology, income. So this is the money that comes in. So usually this is the one that's given to you in exchange for something, either a service or an item. And then the expense is money coming out. So this is usually the being paid out. You will pay for it in exchange for an item or in exchange for a service. So it comes out from you, from the business. So it comes out from your client's business. Um, for example, Pedro bought a POS machine. So that will be an expense because it comes out on you. And then so coming in is someone pays you. Okay. So this is accounts receivable, money owed to us, capital owner's equity. So accounts receivable, capital owner's equity, accounts payable. Um, which I will. This is a brief summary. All right. I will discuss later. Will be discussed and more thoroughly in the videos. So about bookkeeper's responsibilities. So you will record and categorize every transaction by the business into its proper account. Um, you will track the transactions in the software such as Xero or Quickbooks. This is your client's preference. It's either he or she wants the Xero or the Quickbooks, and then your job is just to keep track of the transactions. And then you'll produce various reports such as balance sheets, the statement of cash flows, and if ever the accountant requires it, generate a financial statement. All right. So what's the difference between a bookkeeper and accountant? The accounting is they use information compiled and provided by the bookkeeper to prepare the financial reports and statements. And usually that's part of the tax, especially in the year end. Um, and then the bookkeeper, they make sure that every track of transactions made by the business and that they are correctly recorded in the books of accounts. On a personal note, bookkeeping, if you've been doing bookkeeping, personally, your knowledge in bookkeeping can help you as well in your personal life as well. So without further ado, move on to the course videos itself. See you there.
Okay, friends, moving forward into the course now, I'll be taking over to present the course materials. So, as for our agenda for today, we've crafted together topics that can help give you a good grasp of the basics of bookkeeping, such as the different bookkeeping accounts, the types of bookkeeping systems, making manual invoices, bookkeeping reports, as well as an overview of the common software that you'll most likely use, such as Xero and QuickBooks. Now, who is this course for? Some of you might be coming in already having a little bit of an accounting or bookkeeping experience or have a finance background, while others, or most likely a lot of you, might not have any background on this topic at all but are very interested. Well, rest assured, friends, we've crafted this course to be very helpful for all of us, specifically for beginners or for those who don't have an idea about bookkeeping but are interested in dipping their toes into the pool and to see what it's like and what are the basic or general knowledge that you should know about when you're starting out or when it comes to bookkeeping. Now, bookkeeping doesn't have to be a headache, friends. Aside from the objective mentioned by Michi in the previous video, in this course, our aim is to introduce the most basic but very useful concepts to get you started on your bookkeeping journey. And with that, it's to understand the basic concepts of bookkeeping, such as recording transactions, making invoices, and using the relevant software to assist in your client's business. So, what is bookkeeping in the first place? Well, it's the process of recording the financial transactions and information pertaining to a business on a day to day basis. The bookkeeper ensures that the records of the individual financial transactions are up to date and comprehensive. That being said, accuracy and attention to detail therefore are vital to the process. Some examples of things a bookkeeper needs to keep track of are financial transactions, such as cash receipts, which is a recorded and, more importantly, time and dated document of any cash exchanges, whether it's a purchase done by a customer or somebody paying off their debt or balance with the company or business. There's also purchase orders, which are invoices provided by the seller that defines the amount a buyer owes for the goods they purchased. And there's also, of course, the invoices, which are timestamped documents that itemizes and records a transaction between a buyer and a seller. So examples of this are things like paper receipts, bills, debit notes, or even online records. Now, as for your role, to put it in even simpler terms, your main role is to keep track and, more importantly, categorize and record any transaction that has to do with the company or business's money. Whether that's money that's coming in, such as your income, or money that's coming out of the business, such as your expenses, or accounts receivable, which is money that is owed to the business, or the capital or equity, which is the money that the business owns, or whether that's accounts payable, which is money that your business or your client's business, which is it's money that they owe to other people. In this sense, I hope from this alone you can see how a bookkeeper's role is needed and vital to a company or a business's success, because you're somebody who can help indirectly determine whether something or a business or a company is profitable. As a bookkeeper, your main responsibilities are as follows. So it's to record, classify, and organize every transaction that is made through the course of a business operation. You're also in charge of tracking transactions such as scanned receipts from your client or transactions from banks, and recording these transactions either manually or automatically done in software such as Xero or Quickbooks. And rest assured, friends, we will talk about these software later in the course. You're also, of course, in charge of categorizing these transactions. And aside from that, one of the other things you might be doing is conducting daily banking activities, such as producing various reports, which we will also talk about later on in the presentation. So rest assured, friends, all of these terms that might still seem unfamiliar to you right now will be discussed as we go along in the videos. I do want to clarify something first before we dive deeper into it. Now, one of the more common misconceptions about bookkeeping is that people sometimes interchange it with accounting, when in fact they are two separate fields with their own responsibilities that in the end does work with each other, and both roles are very essential for every business. On the accounting side, they use the information compiled and provided by the bookkeeper to prepare financial reports and statements. And as a result of preparing these statements, they help make the business they help the business make informed financial decisions and judgments. On the other hand, bookkeeping, which is our focus on this course, makes sure to keep track of every entry or transaction made by the business and makes sure they are correctly logged in and entered on the quote unquote books. It is from these entries where the accountant directly bases the financial statements as well as the tax returns that comply within the law. So, in this manner, you can see how proper bookkeeping not only supports the accounting side of the business, but also has an important effect on how the business makes decisions. One other benefit that I do want to point out, friends, is that learning about the basics of bookkeeping can have a direct use for your own personal lives as well. Whether it's in terms of keeping up with your finances or expenses, or if you're setting up or getting started on a small business, you will need to implement these bookkeeping techniques as well to keep up an organized and adequate record of your business transactions. So, with that said, friends, hopefully I've convinced you enough to proceed further. So, let's get started, shall we, friends? Now, to start things off, friends, there's a few terms or concepts that I want to introduce to help make it easier for you to come to grips with the bookkeeping basics. Let's talk about the main bookkeeping accounts or chart of accounts that you will be in charge of. So, as we know, one of your main responsibilities as a bookkeeper is to keep track and organize any and all transactions made by the business. From this, there are five main categories or accounts that these transactions may fall into: assets, liability, capital or owner's equity, revenue or sales or income, and finally your expenses. To make it easier for you to remember these transactions, you can use the acronym ALCRE, ALCRE. Let's go through each of these accounts separately so you guys have a better idea of what each thing is. So, first, let's talk about assets. So, assets are essentially anything that your business owns that is of worth, which includes anything that the business physically owns that help it complete its objective or goal on a day-to-day basis. Now, assets can be divided further into two categories: current assets and non current assets. For current assets, these are those that have a tendency to fluctuate over a shorter period of time or those that will be converted to cash within 1 year. In terms of a business or a company, typically this could include your cash, so cash accounts, literal cash, inventory, typically those that regularly fluctuate, such as office supplies, or accounts receivable, money that is owed to the company or the business that you or your client owns. Your non current assets, otherwise known as fixed assets, are balances that remain fixed over a longer period of time or on the long term and will likely provide benefits to the company for more than a year. So, examples of this are things like real estate, land, or major machinery. So, real estate, as in if your company happens to own actual land or building. There's also things like motor vehicles that the company or business uses for transport. These can be counted as non current or fixed assets as well, since you don't tend to regularly purchase a new mode of transport for the business. Now, non current assets can be even further subdivided into tangible and intangible assets. So, tangible assets, as the name suggests, are assets that have a physical presence. They can be touched. They are in the real world. So this includes real estate, the lands, the buildings that are owned, vehicles, so etc., etc., etc. So tangible assets are typically easier to value, but at the same time are more subject to depreciation or reducing in value over time. Because like anything physical in the world, they eventually wear down or expire. Something that's new eventually becomes old. Intangible assets, on the other hand, are assets that have no physical presence, such as patents, software, long term investments, licenses, and other forms of intellectual property. So don't forget, these two things are two categories under non current assets. Next category are liabilities. So these are the company or business's debts or financial obligations incurred during business operations. So essentially, anything that a business owes, usually in the form of money. Same as assets, there are also two types of liabilities: current and non current liabilities. And similarly, you can define these two things when it comes to time. So, current liabilities are those debts, otherwise known as accounts payable, that are payable within a year, such as your debts to your suppliers, short term debts, and your bills. Non current or long term liabilities, on the other hand, are typically payable over a period of time that is greater than a year. So, one example of this would be long term debts such as multi year mortgages for office space. Next on our list after liabilities is capital or owner's equity, which is essentially what the business is worth. In order to understand what this category exactly is or how you figure this out, we need to talk about how it's calculated by taking a look at the assets, total assets, minus your total liabilities, which then equals to the overall capital or equity, again, which means how much or what the business or company is worth. In terms of the business or company, it's all about making sure your assets and your liabilities are balanced. There may be scenarios where a business does not necessarily have a lot of cash in the bank, so your current assets, and can't physically pay their debts or your current liabilities. But actually, the business may be worth quite a lot because their equity is very healthy, meaning they have a lot of non tangible assets in play. The opposite can be true here as well. A company might have a healthy bank balance or current assets, but might not actually be or but might actually be at negative equity due to their loans or liabilities outweighing their total assets. So the goal here is balance. Having a healthy cash balance and healthy equity means happy days ahead for you or for your client's company. Next on the list is our revenue or income. So this is what keeps the business running on a day-to-day basis. This is the bread and butter, otherwise known as whatever it is that your business is earning, that is revenue or income. On the opposite end, there is your expenses, which is our last main category. These are the costs, or the costs that are required for something for the business. Now, just like in our real lives, this is the most popular category within bookkeeping and accounting because it usually takes a lot of costs or expenses to keep a business running on a day to day basis. Now, at this point, friends, I do also just want to clarify the difference between expenses and liabilities because sometimes you might interchange or mix up these two categories. So, you might be wondering how are these different since both of these concepts deal with money spent or money that is owed by the company or business. Well, an expense is usually something that is owed within an even shorter period of time, if not immediately. So, for example, you're taking your team out to lunch and you pay the bill then and there. Therefore, that is regarded as an expense. However, if you buy something on credit, that would be considered as a liability because you aren't physically paying it there. So keep these distinctions in mind. So just to recap, our main bookkeeping categories or accounts that we have to keep track of for our clients or the businesses are: first is your assets, which are things that the business owns that has worth and will not be transferred to cash in the short term, such as real estate or land that you own and is used for the business. Liabilities are the things that the company owes, so their debts and their financial obligations incurred for the business operation. So it can be things like credit used on a company card or mortgage for office space. Capital or owner's equity is what the business or the company is actually worth. And this is calculated by the accounting equation of assets minus your liabilities. Revenue or income is what your business is earning, and expenses are your day to day costs incurred that is required to keep the business running. So I hope this at least made it a bit clearer, friends, on what the differences are between each account or category. And don't forget, you can use our handy acronym over here, ALCRE, ALCRE, to at least help you memorize these things. So now that you've learned what the categories for the transactions are into the different accounts, let's talk about how the bookkeeping process is done or what are the different bookkeeping systems that are typically used when it comes to bookkeeping. So the first system, friends, is called single entry bookkeeping. So this is used for businesses that have minimal or uncomplicated transaction. This system records cash sales and business expenses that are paid when incurred. Bookkeeping entries under this system don't match transactions to their corresponding accounts. So what I'm talking about are the Alcre accounts that we mentioned in the previous video. So under this system, they don't necessarily match the transactions to their accounts, which can make tracing revenues and expenses a little bit more difficult. So what exactly is being recorded? Essentially, in a single entry bookkeeping system, it consists of a cash sales journal where entries are made when revenue or income is received, a cash disbursements journal, which is where you log in when expenses are paid, and lastly, your bank statements, where both your cash sales and your cash disbursements journals should reconcile with your bank account transactions. So when we reconcile, it means it should match whatever income that you have in your cash sales journal. There should be a corresponding transaction in your bank account records, and vice versa when it comes to expenses that are being paid. So it's very simplified, and as you might realize, this is the reason why this is not really the preferred method for bigger companies because it's not as detailed or as extensive. It's very on the day to day, like what income came in, what expenses came out. It doesn't take into account future costs like your liabilities or everything else that the business owns, like your assets. So this system doesn't really give the clearest picture on your business's financial standing or what it's worth and the future that it's going into. This is where the other bookkeeping system comes into play in what we call the double entry bookkeeping system. This is used for businesses that routinely have more complex transactions. Companies that can collect income through accounts receivable. So to remind everybody, accounts receivable is money that is owed to the company, or receive any merchandise or inventory on credit. So these are liabilities or money that we owe to others. They are better suited for this method. So, as the name suggests, any transaction done by the business or the company is logged in twice in order to properly document the relevant accounts that are affected. For example, let's say your client has a business selling custom handbags and has received a cash payment for one of their orders. And then for this scenario, let's say the payment was for $100. So when we're recording this transaction, the first category or account is very easy to identify, right? This was money earned by the business, so this transaction would fall under revenue or income. Now, typically, under each category, there would be even more specific sub accounts. So, just so you can really track or really specify where the money went to or where the money came from. So in this case, let's say that there is a sales account under revenue or income. This would be where you would record this $100 transaction. Now, before I continue, friends, what you're seeing here right now on your video is I just want to say it's a very simplified example. There are usually a lot more details to log in for every transaction, which rest assured we will discuss later when we talk about the software. But right now, for simplicity's sake, let's say that this is how it looks like, and you've logged in $100 earning under sales, which is under revenue. So that's the first time we've logged in this transaction. Now, don't forget, in a double entry system, transactions are typically logged in twice. Because if you think about it, there's another account that will be affected by this one transaction. So, as we know, cash in itself is also counted under assets for the business or the company. So, let's say for the client, they have a cash account under assets. You would have to log in the same transaction there as well. So the same $100 transaction will be logged in both under the revenue and also here under assets. However, the work doesn't stop there, friends. There is one other thing that you need to log into or categorize when it comes to the double entry bookkeeping system, which we will discuss in the next video. So friends, continuing off of from the previous video, transactions, aside from logging them in twice on the appropriate account, these transactions are also categorized as either debit or credit in the relevant accounts that you've logged them into. Let me show you what I mean. So typically, under these accounts, you would typically find either credit or debit by the following divisions. So, usually for liabilities, capital or equity, or revenue and income accounts, you would usually transactions that are counted as credit, while on assets or expenses, you would see accounts that are typically or transactions that are typically counted as debit. However, this is a very simplified way to think about it, friends. So let me show you or explain for you a little bit more deeper understanding on why that is. So transactions are marked as debits if it increases an asset or expense account, or it decreases a liability, capital or equity, or revenue account. So if this is something that adds on to an asset or an expense, then you can count this as a debit. If it's something that takes away or reduces a liability, the capital or equity, or the revenue, then this becomes a debit. So you can guess the opposite holds true for transactions that are marked as credit. So if it decreases an asset or an expense account, then this is called credit, or it's marked, the transaction is marked as credit. If it increases a liability, capital or equity, or revenue account, then this is also marked as credit. So take note, friends, in the double entry system, debits and credits must also be balanced. Meaning, for every transaction that you will mark as credit, there must always be a corresponding transaction or entry that is also a debit. So the same or with the same or equal value and vice versa. You will quickly notice this as we go along in the presentation, friends, or I'm sure I think some of you might have already noticed that balance is one of your main keywords as a bookkeeper. So let's put this debit credit transaction category into practice from the previous example of the $100 transaction that the company or your client's company has earned. So to recap, your client has just the scenario here is your client has just sold a handbag for their business and they've just earned $100 for it. So there's a transaction for $100. And we've established that we're going to log in that $100 transaction twice. Once under assets under the cash account and once under revenue or income under the sales account. Now, under these, you have to mark this transaction as either debit or credit. So, the question, let's go to assets first. The question is, did the transaction increase or decrease the asset account? It increased it, right? We've added on to, we've earned $100. So anything that increases the asset account will be marked as debit. And by the way, friends, this image that you're seeing right now, usually it's positioned like this. You will have a graph and debits is always usually to the left on the left column and credits is always usually on the right column. So here we can see we're putting the $100 transaction under debits under the cash account. Now for revenue, again, the question is, did it increase or decrease the revenue or income account? It also increased it, right? We earned something. We didn't lose anything. We earned something from that $100. So that can be put under credits, under the sales account. Don't forget that everything must be balanced. And just like that, there we go, friends. We've processed a recording via transaction, or we've processed recording a transaction via the double entry system. And don't forget, as you can see here, it's balanced. We've logged in a $100 debit on one account, which means we've also logged in a $100 credit on another account. Now, friends, I also know that properly identifying transactions as debits or credits also kind of has a learning curve, right? It's hard to memorize the conditions. So here's another graph that will hopefully illustrate the differences out to you a bit more. So to recap, for assets, for any asset or expense account, if it is a transaction that increases it, then it's a debit. If it is a transaction that decreases it, it's a credit. On the other hand, for any liability, capital or equity, or revenue or income account, if it is a transaction that decreases it, then it's marked as a debit or it's categorized as a debit. And if it is a transaction that increases it, then it is categorized as credit. Now, friends, at this point, you might be wondering, so what exactly is the point of this, right? Like, why do we log in each and every transactions? Why do we make sure to be really meticulous and log them in twice and mark them even further to specific accounts, as well as if they are debit or credit transactions? Well, let's now talk about the end results. So from all of these transactions that you log in as a bookkeeper, several reports can be produced that will give an idea of several things about the company, such as their financial health and standing. These reports are usually produced every reporting period, which is usually done every month, but sometimes businesses require a quarterly or even annual reporting period. First is the balance sheet, which is a report that breaks down your business's financial situation. It includes, as we've discussed earlier, the assets, liabilities, and capital or equity of the business. And its purpose is to offer a snapshot of what your business owns, so assets, what it owes, so liabilities, and what it's worth, so the capital or equity, as well as the amount invested by its owners reported on a single day, so you can get a better understanding of the business's financial position. As the name suggests, these three categories need to be balanced. There's our keyword again, friends, right? With the following equation in mind. The company's total assets should be equal or balanced with the total sum of the liabilities, the company's total liabilities, and its equity. Here's an example of what that can look like. So the balance sheet is usually divided into two columns. On the left side is usually an outline of all the company's total assets, and on the right column are the liabilities as well as the capital or equity. So, as you can see from this example alone, this becomes a very important report to show if a business, or whether it's yours or your clients, is financially healthy. Take note that for most cases, if the total assets and the total liabilities and equity are unbalanced, so meaning one has more of an amount than the other, then this most likely means that a transaction has been logged in with an incorrect amount. So to reiterate, make sure to pay attention to your details. Or I guess one of the main qualities as a bookkeeper, friends, is to make sure they're paying attention to their details, because it's important right now when we're seeing the reports, because that's how everything keeps balanced. As you can see from the box, the items marked in the red box, that the prices are all the same because both assets and then the total liabilities and equity becomes the same. The balance sheet also answers the question of if a company has a positive net worth, meaning do they have enough cash and or short-term or current assets to cover their financial obligations, otherwise known as their liabilities, or is the company full of debt? So this goes back to the equation earlier regarding capital or equity, which is assets minus liabilities equals equity. If you end up with a positive number, that means the business has a positive net worth and has enough assets to cover their financial obligations. While if it results in a negative number, then that means that a business is under a lot of debt. Next report you should know about is the income statement. So this is otherwise known as the profit and loss statement. I hope you guys are also noticing how the ALCRE, the ALCRE accounts are coming into play now when it comes to the reports. So earlier, we put into practice where the assets, liabilities, and capital or equity goes. Now here for the income statement, as the name suggests, this reports the revenues or profits and the expenses or losses generated by the business during a specific reporting period. It's considered to be the most important financial statement because it shows, or one of the most important financial statements, friends, because it shows the profits or if the business is generating any profit at all. To determine the business's net income for the income statement, there is a simple formula, which is revenue or income minus your expenses, which equals the net income. This shows the profitability of the company. To put that in even simpler term, friends, if revenue is higher than the expenses, then yes, that company is profiting. If the revenue or earnings or income, however you want to call it, is lower than the expenses that the company is spending, then that means it is not profitable. As shown in this example, when we subtract the business's revenue with their expenses, it still ends up with a positive number, meaning the business is profiting, which is exactly the main point of the income statement. All right, friends. Next on our list of bookkeeping reports is the cash flow statement. So this shows the money flowing into and out of a business during a specific reporting period. The cash flow statement is important to lenders and investors to determine whether a business has access to the actual cash needed to pay off its debts. Basically, it shows if a business is managing its cash well enough to pay its debt obligations and fund its operating expenses. The cash flow in itself is calculated by adding or subtracting the differences in revenue, expenses, and credit transactions, both of which appear in the balance sheet and income statement that we talked about earlier and can look something like this. This is needed because some transactions do not involve actual cash, right? Like stock based compensation and deferred income taxes. So these have to also be taken into account when it comes to the calculation of the cash flow operations. Just a heads up though, friends, for most bigger businesses, this is done or compiled on the accountant's side. So I'm mostly just showing this to you so that you know at least where those first two reports, like why all of the reports and the accounts and the transactions are important, because it affects other reports and other accounts and other people's roles as well. Now, lastly, after the transactions have been posted or logged to the ledger, so that's what we call what contains all those ALCRE bookkeeping accounts, it's good to practice or to prepare a trial balance. Now, a trial balance is simply a listing of the ledger accounts along with their respective debit or credit balances. Basically, it's you compiling all of the assets, liabilities, capital or equity, revenue, and expense transactions, and then also split up into their debit and credit categories. So take note that this is not really a formal financial statement, but rather it's for you or a self check to determine if your transactions are properly categorized and the debits are equal to the credits. On the trial balance, the accounts should appear in the order, in the ALCRE order. So here, in the example provided, you can see the cash accounts, or the cash and the accounts receivable and the land, which are your assets, and then the liabilities, which are the accounts payable and notes payable. Then you have the capital stock or equity, your service revenues, and finally the expenses, such as for advertising and utilities. So you can see here that the accounts are also ordered in the ALCRE order. And then you can see on the right side of your trial balance, there's the debits and the credit columns. And as you can see here, it serves as a way for you to review your logged transactions. And if they are balanced correctly, with the debit transactions on the left column and the credit transactions on the right, then if you total all of these, then hopefully it's balanced, equal number, as you can see in the example presented. Just take note though, friends, that the trial balance is just one factor in determining the accuracy of your work. A balance or a trial balance is no guarantee of, it's not 100% guarantee of correctness, because there's also human error involved, right? Such as forgetting to record certain transactions. Or what if you record the same transactions twice? Or what if you post an incorrect amount in the categories? So these issues might produce a balanced trial balance report, but the actual transactions are incorrect. So again, it all goes back to paying attention to your details. So, friends, one of your main tasks as a bookkeeper as well is to do invoicing. Now, first, let's discuss on how to do manual invoicing. Now, I'm sure some of you might be wondering, why not just learn about the software used for bookkeeping, since that makes invoicing a lot easier as well? Well, think of it like this. Manual invoicing helps you at least understand and know why keeping track of every single detail regarding any and all transactions is important. It allows you to increase your control over data entry and protect privileged information, and to a certain extent is a little bit less complicated because there's no new software to learn about. Just to clarify the terms we're using as well, friends, what we mean by an invoice is that it's the time and date stamped commercial document that itemizes and records transactions between a buyer and a seller. This is issued by the business owner, or in your case, the VA or the bookkeeper, once the goods or products have been delivered to the buyer. So if you think about your own personal lives as well, friends, I'm sure you've also received invoices for, let's say, you've availed of a service, or you placed an order for things online. I'm sure you're also familiar with receiving invoices as well. So we're now seeing the other side of this on actually making this invoice for others. Now, with all that established, friends, let's talk about how to make a manual invoice. Now, you can pretty much use any file or design software you want, since making invoices manually is pretty flexible and, more importantly, customizable. But do take note that this is usually done through either Microsoft Excel or Google Sheets, and even design applications like Canva. And this is because you can either use the many customizable invoice templates available online, or it allows you, or these systems allow you to create one from scratch. So friends, as mentioned, first we can use some online templates here in Google Sheets. So right here on the interface, you can see that there's an option to view the template gallery. And then once you do that, just search for the option for the invoice, which is right here. And then after you've selected that template, just wait for it to load. There we go. Now you can see why the online method, or using online applications, is pretty much recommended, because you can find a lot of templates that are made up for you. So once you've crafted or made the new file with the invoice template, it's now just up to you to customize it, and of course add the relevant details like your company name or your client's company name. Usually, like as you can see here, there's a blank spot where you can put something like a company logo, and then the contact details and company addresses here. Now, one of the more important parts that you need to put in an invoice are the dates, as we've mentioned. First is the date on when this invoice was sent, and of course, when this invoice is due to be paid. So this is something you need to confirm, of course, with your client. Do they have a 15-day or a 30-day policy on when whatever transaction happened has to be paid? And then, of course, other things such as the details of the recipient of this invoice, their name, their company, their street address, and stuff like that. And of course, as for the items themselves, they're always descriptive. So you break down each item or service that was provided, what was the quantity, and of course, what is the price like for each unit. And then usually there's a total price for it as well. Make sure to double check the pricing again with your client to make sure that it's all accurate. Finally, there's also adjustments that may or may not need to be included in the invoice. So we're talking about discounts and taxes. So as you may have guessed, this is not something you might be familiar at first, or familiar with at first. So this is also another conversation you may have to have with your client, so that you'll know what taxes need to be applied to certain invoices or services, or what if there are any discounts that need to be involved for this particular invoice you're making. And then, of course, after you've filled in all the necessary details, you can save this invoice as a PDF. So, usually the norm is to download and save it as a PDF, because the PDF file format is pretty universal. And then it's the norm. We usually send invoices via email. So, you might have a work email that your client might want you to access in order to send invoices on behalf of them. That said, friends, as you can see from this screen, I guess on a personal taste level, Google Sheets it's a little bit plain, right? Like design wise, I mean, the invoice template is a little bit plain, which is why my preferred method, or personally what I like to use as the software, is Canva. And this is because, as you can see here on Canva, or if you're not familiar with Canva yet, friends, it's an online free design tool that where you can find lots of different templates for things like presentations or posters that can help you, I guess, make your presentations pop out a bit more. And included in these template examples are invoices as well. As you can see here from the templates tab, under business, there is an option to look at invoice Templates. And again, friends, this is completely free. There is a paid version for you to access more designs, but even from just the free version, there's already a lot. As you can see here from your screen, there's already so many options for making nicer looking invoices. So that's why I tend to prefer to use Canva when it comes to anything that has to do with design because, just like adding that little bit of pop to your work can make the difference. However, friends, I do want to caveat by saying, as mentioned earlier, this is not necessarily the preferred method for most large businesses or companies because it can be a bit tedious manually creating and logging in the details for each and every invoice that you need to make from scratch. Imagine the time it takes to just individually create those invoices. And what if your client or your client's company has like hundreds of customers each day? Recording the info and sending them to each one of their respective recipients will take you like the whole shift or like all the whole time, right? And this is not something that's you just do once. Typically, you're creating several invoices in a day. So this is where the software comes in. And it's at this point, friends, where I'm going to hand off the mic to Mitchie, our subject matter expert, for her to demonstrate to you the software like Xero and QuickBooks or the software systems that are usually used when it comes to bookkeeping.
Hi everyone. So, after discussing all the basic concept of bookkeeping, we will now discuss the very important and trending software, accounting software that all of the bookkeepers are using right now. So, our software for today is QuickBooks. So, what is QuickBooks? QuickBooks is one of my favorite software, and this is an accounting software package developed and marketed by Intuit. So these products are also geared mainly towards small and medium-sized businesses. And yeah, they offer premises accounting applications as well as cloud-based version that accept business payments and business payments and manage and pay bills and payroll function and all. So it's very useful for us. So as you can see, um, there are two types of QuickBooks, QuickBooks Online and QuickBooks Desktop. So we will not discuss the QuickBooks Desktop because it's not really using by the accountants or VAs or bookkeepers like us because some of the clients are also using the QuickBooks Online, which is this screen is showing to you because this is very accessible and convenient to use. So for now, we will discuss the three parts of this QuickBooks. So the first part is where we can locate all the transactions that we want to create, and I will discuss with you the dashboard. That's the first part. The second part is how to create an invoice using QuickBooks. And the third part is how to make a journal entry. So, all right, so let's start. So, right here, you can check the company that you are handling and then the logo. You on the left side, you can see the plus move or the settings or the button where you can see the customers, suppliers, employees, and others. So if you want to create an invoice, you can also click here. And then if you want to process journal entry, just click here on the other side. So we have here also sales and then the cash flow where you can see the money in, money out and all. The reports where you can check the balance sheet and balance statement, the profit and loss or the income statement that I've discussed a while ago, and then accounts receivable aging and so on and so forth. And then we have here also accounting, under accounting, the chart of accounts, where you can categorize all the transactions that you have. Alright, we're done with the dashboards. We will now go to our second topic, which is the invoices. So all you need to do is to click sales and then click the invoices. And then after that, you can see here if there are invoice already created to your clients. So if your client asks you to create an invoice, just click create invoice. And then after that, you will see here the customer part, customer email email, TIN number, and so on and so forth. So I have here a sample customers. So if you want to create an invoice to Ben and Ben, and then to Max Reyes or XYZ company, and so on and so forth, just click the customer name. And for example, for Max Reyes, if you will click the Max Reyes, it has already an billing information about their billing address, and then the company, and so on and so forth. So once you click that, input the email address, for example, max@gmail.com. And then TIN number, if they have a TIN number, or if not, you can leave that part. And then the terms, if the terms of your client is 15 days after the service, 30 days after the service, they need to pay you. And if you are waiting for up to 2 months to pay off that transactions, yeah, you can click it here for the terms or the payment terms. For now, we will take that net 30, and then the invoice date and the due date. So it will be automatically input the due date if you click the terms. So for example, 15, yeah, it changed. So for 30 days, it's October 21. And we have here the invoice number. It's a unique number for invoice. So for the information details of this sample invoice creation, we have here the 1003 because we have a two invoice created a while ago. So for example, we will use that 1003. So we can input here the products or services. So we can add new or create sales, or just click sales, and then the description. For example, office supplies. And then quantity of the office supplies is, for example, 5 boxes. And each box of that office supplies, for example, the office supplies is bond paper. Bond paper. So 5 boxes. The quantity is 5 boxes, and each box has $10. For example, it's 500, and the rate is $10 each boxes. So 500 box of bond paper. So the amount is 5,000. And you will also ask your client, you need to ask your client of what rates should you use for creating an invoice so that you will not guess the tax. So just click the tax rate that your client has already instructed you. So the subtotal is 5,000, total is 5,000, and so on and so forth. So you can also create a message on invoice, whatever message that you want to create, message on statement, or attach anything, you can also attach. And then click the save and send. If you click the save and send, it will send to your client. So if you want to send it to your client, it will give you the template on how will you send it. So it's very easy to use. So it has a company of yours, the email address of yours, and then to the email address of your client, and subject, and the body, which is Dear Max Reyes, we appreciate your business, and so on and so forth. So it has already a template, so it's very easy to use, and then you can send it to your client. All right. So it has already logged on your invoices. So September 21, 1003, and then 5,000 due in 30 days. So if you receive the payment, just click yes, and then if you want to follow up, just send again, and then send a reminder, and so on and so forth. So it has already created. And the customers that you have, you can also click here, so you can check, you can update all your customers here of your client, and so on and so forth. So we're done on creating a invoice or sales invoice. So right now, we will go now to how to create or how to journal entry the transactions that you have. So for the journal entry. So journal entry, just click the journal entry under your plus new, and then it will go to journal entry. So as you can see, you can check the journal date where the transaction has created and then the number of the journal. And then you will create an account. If you will see, you can also check here what type of account are you trying to encode. So for example, we will create a sample journal entry. So for example, it's a rent expense. So just click rent expense. So the sample here is you paid for a rent for your shop to your landlord. So example is 3,000. So click rent, and then what is the normal entry for rent? So this is part of your expense. So this is debit. As we discussed a while ago, what are I'll create the asset, liabilities, capital, and revenue and expenses. You can now check what is the entry of the transaction. Okay? So for the expense, it's debit. So for example, the amount is 3,000, and then you can input the 3,000, and then the description is rent paid for shop to our landlord for the month of September. Okay? 2021. Alright, so the customer name is, for example, Ben and Ben Company. So you need to click, and if if it's not included on your record, you can click add new, and then input the details of your customer. So example, the name and the team. So if it's already Ben and Company, you can click it here and then ask your client if what tax will be using. So once you entered it in accounting concept, all you input for debit, it should be equal to your credit. So right now, you will use your knowledge on how to encode the transaction. So if you already paid a 3,000 rent to your landlord, what is the credit side? So if you pay a 3,000, it is an expense, right? So your cash was deducted. So all you need to click is the other side. So cash and equivalent, and then it will be credited to your cash and equivalent since cash is under asset. Cash was deducted by 3,000. So this is the meaning of this journal entry. So 3,000 pesos is the credit, and it will be copied the description of your rent or lease expense details, and then click your company. For example, is MRL. So MRL company. It will be deducted to your cash. So save. Click save. Yeah. So we have here a total of 3,000 on the debit side and 3,000 on the credit side. So this is the sample on how you will encode or categorize the transactions that your clients have. And then click save and new if you want to create another one. But if you want to finish, just click save. And if you want to cancel, just click cancel and clear. So right now we have a journal entry 3. So it should be equal. The rent expense and the cash and cash equivalent was deducted. So alright, so we're done with the journal entry. So it's very easy to create a journal entry. Alright, so click X if you want to go back to your dashboard. And if you want to check, and if you want to click the expenses, it's 9,000 pesos. The profit and loss is 1,000 is the net income. So the income is 10,000, but the expenses is 9,000. This is the income statement. And then the expenses was 9,000. This is the rent expense, $9,000. So that's all for QuickBooks for now. So if you have questions, just click help. So you can ask what is the process that you're not confident to do. So QuickBooks Online or Assistant will answer you. That's all for QuickBooks for now. And if you want to click the all the features that you want to click, you can navigate it because it's very helpful. And yeah, this is the QuickBooks Online. You can do it on your client and you can also do it on your own business. And just to give you an idea, it has also a 30 days free trial. But for now, those are the three important things that I want to discuss with you about QuickBooks. Hi everyone. So today I will discuss with you how to navigate Xero application. And but before we start, I would like to introduce to you our software. So Xero is it's a New Zealand domiciled public technology company, and it's listed on an Australian Securities Exchange. And it is also a cloud-based accounting software platform for small and medium-sized businesses. And I really love Xero because it connects your clients back to the cloud ledger, and every morning their data flows to Xero where you can both see it. Seamless connectivity means clients can keep to Xero where you can see their data without data entry. And all they need to do is to code their transactions. So right now, once you've registered and logged in with your Xero account, you can see here the dashboard. So this is the dashboard of Xero. So on the left side, you can see the company of what you're handling. And then if you click that one, you can see here the files, settings, and all. So for this session, I think I will discuss three parts of Xero features only. So the first part is the dashboard and the most used features of the Xero application. Then the second part is how to create an invoice. And the last thing is how to journal entry every transactions that you have. So let's start navigating the Xero application. So if you click the settings under the company, you can also see here different part of settings, the organizational details, users, currencies, and invoice settings and all. And then you can also check under settings is the add new organization. If you want to add your new company, your new clients, yeah, you can also add here. Click the add new organization. And if you click the dashboard, you can see here the summary of all the transactions that they have. So that there is a business bank account where they connect all the bank accounts that they are using, that your clients using for their business. So all the transactions using their bank are also recorded here directly to Xero. And you can also see here the total cash in and cash out and account watch list and invoices. So if you have an overdue invoices, you can see it here. And for the bills that you need to pay, you can also see it here, and the expense claims. So after that, you can also see here the business part wherein you can also check the invoices if you want to create an invoice, bills to pay, and so on and so forth. So under accounting, you can also see here reports. On reports, you can also check all the asset, liabilities, the capital and revenue expenses under balance sheet, reports, profit and loss or income statement. You can also see here account transactions and so on and so forth, and the journal report. And yeah, that's all for business. And for now, we can also go here to accounting. So under accounting, it has also a reports and advance. So if you want to click the advance, you can see here the manual journals if you want to record transactions that your clients wants you to record. And then you can also see here the chart of accounts if you want to create a chart of accounts, or if you want to check the recorded chart of accounts of Xero. And if you want also to search for any process or anything that you want to search about Xero, you can also click here notification bell if you want to have an update, and question mark if you need assistance from Xero and the profile. So that's all for the navigation of your dashboard. And now that you know how to navigate your Xero dashboard and to check how and what part is the what part is every report that you need. So let me discuss with you how to create an invoice right now. So I know that some of your clients will ask you to create an invoice. So it's very important to have an idea about it. So under Xero, it's very easy to create an invoice. So all you need to do is to click the business and then click invoices. And then after clicking the invoices, it will give you and show you a lot of invoices that are recorded for your client's business. And then all you need to do is to click the new invoice. And then invoice is the way of how your clients or the owner of the business will ask for payment of the products or services that they they provided for their clients. So all you need to do is to type the owner of that invoice where you want to send that invoice. So for example, you want to bill this person or create an invoice for this person. If it's not yet recorded, you can also click new person. So for example, you want to input name of Michelle Santos. And this is a new contact. So just click new contact and also input the date of the invoice and then the due date of that invoice. So for example, you want to bill for October rental. So all you need to do is to click 30 days after the invoice date. So September 3rd. So September 22. So the due date of the invoice that you will be created is October 22. And then the invoice number, it is a unique number of invoice for Xero. So for example, for the client has already 32 invoices on their previous transaction. So the next invoice that you will be creating has also added has also provided an invoice number. So it's 33. So the reference number, you can also create it. For example, it's rent October 2021. It's up to you. How will you create a reference that is connected on the products or services that you are creating? And then click the branding. So you can also ask your client if it's standard or special projects or so on and so forth. So for the cash and currency, just always check the currency. So if you want to check if it's USD or AUD, you can also change it to the currency setting. And then for the item, you can also check if there is also recorded item here. So for example, it's a rental, so it has also an item here. Just click rental. And the description is already okay. So it will be recorded already. And then just click the quantity. So 1, and then unit price, for example, is 5,000 per month or 3,000 per month, $3,000 per month. And if there's a discount or none, just click 0. And then account, just check if what part or account will you record that. So it's an income, so it's a revenue, so it's a sales because the business is a rental business. So all right, so sales, and then the amount is 3,000, and all you need to do is to click save or approve. So once it's approved already by your client, so click save and check if the invoice is okay. And then, yeah, it's already recorded. So as you can see, there is a rent October 2021 and it's recorded as $3,000 and it's a draft invoice. So if you want to view this invoice, just click view invoice. And then if you're okay with that invoice already, just click approve. And then you can email it to your client. So put an email address. So for example, it's at gmail.com. Then it has already a template, email template. So you can send it already. So just click send. And then the client will receive it already and pay for the bill that you want him to pay or her to pay. So it's already okay, recorded already. So this is the easiest thing to create an invoice. So that's all. So if you want to check the invoices, all the recorded invoices, it's here already. So that's all for the creation of invoices. So now we will discuss how to create or how to record all the transactions that your client have. So using the journal entry or manual journal entry and using this accounting software Xero. So all you need to do is under dashboard, you can see here the business and then accounting. So just click accounting and then under reports, you just click advanced. And after clicking the advanced, you can see here advanced features like manual journals. Then click manual journals. And as you can see, you can also check here if your client has already recorded journal, previous recorded journal or journal entries. So right now, we will try to create a new journal. So just click new journal and then just input the transaction under narration. So if your transaction is you're paying a rent expense for your office, for your client's office. So all you need to do is to narrate it. So rent is paid for our office space for the month of, for example, October. You're paying for the month of October 2021. So, and then just click the date today. So it's September 23. And after that, you can click the description and it will auto-narrate the transaction. And then on under account, this is the importance of the chart of accounts. So once your client has already a chart of accounts, you just need to choose what type of transactions you are recording. So for example, rent is an expense, type of expense. So you can also search the type of expense also under rent. So just click rent and it has already a three digit for chart of account under rent expense, and it has already a tax rate. And for example, you have a region, so just for the sample, just click West Coast, and The amount is, say, 5,000 US dollar. And then on the second line, you can input a description for the credit side. So just to remind you, since rent is a type of expense for the owner of the business, so it's debit side. And on the second entry, all you need to do is to type a description. So once the cash was deducted because of that expense, which is you pay for your rental, so you can input cash account. And then for the chart of account, just click under asset, which is cash account is also under asset. And under asset, what kind of asset? So you can include it to prepayment, since you are paying in advance for the rental expense of your office. So just click prepayment, and then it will automatically post the amount to credit side. So the total is 5,000. And then you can also add line if you have a lot of transactions that you want to include for that day. And if the transaction is only rental expense, just click post. And it's already posted. So rent is paid for our office for the month of October 2021, 5,000 US dollars. So if you want to reload it, you can also see here all the journal that you have for your client. It was already posted. So that's the sample transactions that you can add on your journal. So that's all for manual journal entry. So if you have also a repeating journal or transaction, you can also click the new repeating journal. And if you are using an Excel, you can also import the journal that you are doing for your recording and upload it automatically on Xero. So you don't need to type it anymore. So yeah, that's all for manual journal. Thank you so much.